What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, it's all about Facebook, ticker FB. We've got an action-packed agenda for you as always. So I'd like to thank everybody for coming on out to this live event. We do these all the time. We're going to do one tomorrow for Tesla. That's going to be at noon Central. I wanted to do it a little earlier, but, you know, just things just get in the way. Life gets in the way, and I'm going to have to do that one the day of. So sorry about that. I don't like to do the day of kind of things because I want you to have a little bit more time to do what you're doing and, you know, get it all figured out on if it's something you want to participate in. So I apologize for that. But we do have Facebook here, so you got a whole nother day ahead of time. And again, guys, if you're not hooked up with Zach's Live Trader, shoot me those emails, livetrader@zax.com. We'll get you squared away for just $9.99 a month. What do you get for that? Well, you get our live Q&A session that happens the morning after. In this case, it's going to be Thursday at 9 a.m. Central, where we have a live look in on Facebook and Tesla and how they're reacting to earnings. Plus, you get the good, the bad, and the ugly weekly trade review where we look through all these trades that we've been talking about. And there's one of these trades each week that you just don't get unless you're hooked up with Live Trader Premium. Last week, that was Apple. This week, it's going to be NVIDIA, however you want to say it. Ticker NVDA. So we're going to do that Friday in the morning. So lots of fun stuff going on. Remember, guys, I got a little bit of a delay. So from when I talk to when you guys hear it, there's a little bit. But I do have the chat window up open live, so feel free to talk amongst yourselves and throw out things to me. Try to, you know, I'll try to address any concerns you might have. But again, there's a little bit of a delay, and I got an agenda anyway. I got stuff going on here, folks. So why don't we just go ahead and get elbow deep here into Facebook. Now, by now, I'm pretty sure all of you have Facebook accounts, right? Pretty much everybody. Everybody's grandma has a Facebook account. Their mom has a Facebook account. That's when Facebook started going downhill for me, when mom was on there and my aunts and people are putting their dirty laundry out there, starting drama on Facebook. It's like, dude, come on, man. What's going on here? Let's get it together. So we all know Facebook. This was very controversial when this came out. I remember the IPO day, and it was terrible because you couldn't get filled, but they still took your order. I know guys that put in like market orders for Facebook and got filled. What was it, like 42, I think? But you didn't find out you got filled till like 3 days later or some kind of nonsense. It was terrible. The IPO was terrible. Then the stock sold off, and then since then, obviously, it has been just a runaway, fantastic trade here. You know what I'm missing, guys? I'm missing my Epic Pen. How could I have an Epic Facebook video without the Epic Pen? Now I have the Epic Pen. Yes, the Epic Pen is mine. Okay, so as always, we kick off things with our price consensus and EPS surprise chart here on Zax.com. And what do we have here, folks? We've got the black line, which corresponds to the right y-axis, which is the price. The red arrows are earnings misses. The green arrows are earnings beats. These multicolored lines represent what I like to call the evolution of our Zach's consensus estimates over time. I love this chart because it also has volume here. Now, interestingly enough, you've seen volume sort of dip down here on Facebook, but price has gone up. So maybe nominally volume hasn't really taken much of a, I mean, it still has. It's been cut down pretty good. You see this on a lot of charts though, right? They crack down on the HFTs and this is what happens. All right. So there's that. So pay no attention to that. Well, not pay no attention, but don't worry so much about the volume here. Multicolored lines, this is what you need to look at. So we do have growth embedded here, growth embedded here, growth embedded here, and growth embedded here. So lots of growth for Facebook. So that's all very good. Dramatic increase in EPS for 2016 throughout the course of 2015 and last year. So that was great. And the stock obviously tracked along with it. So that is also very good. But recently here, we're seeing sort of a rounding off of these EPS estimates. The growth's still there, right? But it just kind of came down a little bit. So not in that same sort of upward vein as we've seen before. Now, granted, we had an issue like this here, right? Where this EPS came down a little bit. Had that in late 2014. Just kind of temper your expectations. And then we went on through, right? So perhaps that's what's happening here. Like, let's just reel it in a little bit and then step on through. So as far as the price consensus and EPS surprise chart goes on this one, this is pretty darn good. Not perfect, right? But pretty darn good. And then the last miss, well, that was way back in 2015. And they had a rash of them, a string of 3 misses in a row. But we're coming out here, we've got coming in hot, right? 1, 2, 3, 4, 5, 6 beats in a row for Facebook. The other part about this awesome chart we have on Zacks, the price consensus and EPS surprise chart, you can see the magnitude of the beat based on the dashes in the arrows, right? So the bigger beats are going to have lots of dashes like this. This is a big beat. So that's good. So you can tell small beat, big beat, big beat, big beat. But the misses have been small. So that's all good too. Guys, the draft has me, I'm in the zone here now. I'm feeling very colorful today, right? I'm going to draw a lot of smiley faces and pictures today, I've decided. All right, so that's the price consensus EPS surprise chart. Kind of what do we glean from it? It's been pretty good. They've done a good job managing expectations and delivering on the promises that they have in fact made. So that's good. Let's look at the detailed estimates page here on Zacks.com. See what else we got. So Zacks ranked number 3, hold right now. Value style score of D. Well, duh. Growth of A, momentum of C for an overall VGM composite score of B. They are trading about 34.65 times earnings. Again, they're going to report after the bell mañana. So you got the rest of the trading day today and tomorrow to figure out what it is you want to do. And remember, we're going to cover this in the morning after video Thursday, 9 a.m. Central. Can't get that unless you're a member of Zacks Live Trader, so shoot those emails, livetrader@zacks.com. Industry, they're in the top 24% of our Zacks industry rank, so that's good. And I think we put them like in the internet services or something, industry, something like that. We'll go back to that. Here's where it counts. Year-over-year growth estimate for the current quarter, 45.85% on Facebook. Next quarter, 40.38. Current year number, 38.02. Next year number, 26.36. I know what you're thinking, right? Yes, these are huge, eye-popping year-over-year growth numbers. But they are shrinking a little bit in the next year. Why are we going from 38% down to 26%, right? Well, I mean, it's a function of a lot of things, right? Kind of law of diminishing returns. Just math. They're still going to add $10 billion in revenue next year, right? That's a ton of money. So take it easy. It can't all be nice, sweet 30% across the board like Amazon. What's the overall effect to the EPS? We got 54% growth year over year for the current quarter, 38% for next quarter. Current year looks like 21s, and next year 25.98. So the EPS is going to get better, so that's good. Definite plus. Why is this Zacks rank number 3 right now? That's right. Give me the big marker there. Zeros across the board. Everywhere you look, zeros. So nobody has the gall or the chutzpah to come out here and increase their earnings estimate or decrease their earnings estimate over the last 60 days. Just hasn't happened. Nobody's doing anything. Overall, obviously, there's very little impact to our Zacks consensus estimates. 88 cents for the current quarter. This is going from 107 to 105, 447 to 440, 566, 554, right? Nothing doing. There is nothing doing. Now the surprises. Big surprise, big surprise, nice surprise, smaller surprise. Still decent. Now, I know what you're all thinking. Dave, what's the overall impact to the stock price? That's where I reach in my bag of tricks here and bust out a little earnings surprise action for you. Last quarter, despite an 11% surprise in EPS, 11% surprise in EPS, the stock really didn't move. And on the revenue side, that was a 4% surprise on the revenue. So you get 4% on the revenue, 11% on EPS, and the stock still doesn't move. The quarter before, you beat, and you had a negative, big-time negative day. A couple of days. Then we got 3, 7.9, 11.77, 6.18. So kind of all over, but the reason for that, folks, is because, yes, while it is all about the almighty dollar, what's your EPS going to be? What's your revenue going to be? All these tech stocks got their own little metrics. So for them, it's like monthly active users. We also want to see what the ad revenue is. So there's all sorts of moving parts here when it comes to Facebook. So I got a quick question for you guys. How many of you have Facebook? And shameless plug, have you checked out my Zacks Facebook page? Just wondering, just throwing it out there. I'm really looking to, give Pando more stuff to do. Because I like making work for other people. No, just kidding. So Pando, one of my buddies here at Zacks who helps me get this whole thing together, I call him Pando. He's in the chat sometimes. His name's Patrick Anderson. Great guy, helps me out with a lot of this. And he basically set up our Facebook page thing for me. So it's like official. We need to make it prettier, though, because it's terrible right now. But I don't know if that's like an active thing. Maybe we should do that. Maybe that's where we need to do our little community thing that Kurt was talking about last time, where we have sort of a discussion and everybody can go ahead and contribute, their ideas of what they're trading at. Yeah, have but don't use it. That's the thing. I have it, and wish I didn't use it. Anyway, okay, so that's where we're at here. Now let's look at something else. I like to cheat. Take a look at my historical Zacks rank on this, just so I know. And just so you know, Facebook has been in the good graces of our Zacks rank for a long time. Is it any surprise that the stock has been going up? No, because the Zacks rank is awesome. So there. Using the Snapchat. See, I don't know. I've been trying to come around to Snapchat, but I don't. It's fun, but I don't get it. I don't get it. Anyway, so there's this. Zacks ranks positive, pretty good, wonderful, to the upside, all very fantastic and encouraging. We already saw that other page. This is something I do want to show, though, that I didn't realize about Facebook. This is Facebook compared to the internet services industry, right? So remember I was talking about the Zacks industry rank. This is the rest of them. And year to date, Facebook is up 33%, and the industry is only up 15.8%. So definitely a leader there. Not very, not like shocking, but just a little surprising for me to see that. dig into the technicals. But let's not do Facebook first. Facebook, guys, obviously is part of the FANG, right? Not Diamondback Energy, but Facebook, Amazon, Netflix, and the Googs. So these really drive a lot of what happens in the NASDAQ, right? But these were more of like the what did they used to call these? The glamour stocks. That was the thing. So Facebook, let's go back and look at this NASDAQ, right? Because I like talking about this. In here, you don't have the same pattern that you had with a lot of the other indexes. With a lot of the other indexes, we had, a sort of downward channel that got broken to the upside, right? So what I mean by that, I know, guys. Here's S&P had this downward channel, boom, broke out from the downward channel, okay? The NASDAQ didn't have that situation. The NASDAQ just kind of kept on trucking and has been trucking since arguably February 2016. Little dip in last June. I remember that. That was kind of painful. Quick little dip here, and then that was it. And you could draw your fib levels off here, but really there hasn't been much of a retracement to speak of. I mean, think about that. Coming here to the early March high, March 21st high, and we had a nasty day to the downside, we still couldn't even get the 23% retracement of the move off of the lows. I mean, that's pretty remarkable. And so really this is all just one move to me that just keeps on going. So a little bit of a consolidation, found support at the 50-day, and then now we're still off to the races. So that's kind of the underlying technical picture for the broad index, which Facebook is a major part of. Well, let me clarify this. Broad index that's very correlated to stocks like Facebook. Okay, let me clarify that. All right, before everybody starts screaming at me. So NASDAQ, a ton of tech stocks, right? Tech heavy index. Okay, so when you get huge rally in the NASDAQ, that obviously is going to correlate to huge moves in Facebook. Okay, I want to kind of make that sort of clear for you, for everybody. All right, okay, so I'm not saying direct causation. What I'm saying is you have a very strong correlation between them. Okay, so there you go. And guys, the other thing is, despite the two letters here, right, just the F and the B, remember back in the day, you had to have 4 letters in your ticker to be on the NASDAQ, 2 letters to be on the NYSE, 2 or 3 letters to be on the NYSE, right, or 1 letter, I suppose. Pretty much anytime you saw a 4-letter, it was NASDAQ. It's not like that anymore. You just pick your letters, and it doesn't matter, okay? So, all right, I'm done with this part. Back to the Facebook. Again, and you can call it the Facebook, by the way. It was originally called the Facebook. You don't sound like an old person when you say it. No sign of a retrace here either. Just really nothing. Just more strength. And I would have to go, I think, to the weeklies chart really to get anything. Look at that. Keeps on trucking. Again, the retracements have been buying opportunities along the way the entire time. Dips below this 50-day. This is something I like, though. So note, and I want to point this out because I've been using this money flow indicator recently. Now notice kind of the choppy behavior in Facebook while money flows are increasing, okay? Divergence, guys. It's all about divergence. I don't know if that's a stupid video. Is that a movie? Or Divergent is the movie. Something like that. Anywho. Money flows increasing while Facebook's sort of chopping back and forth. That sort of divergence should clue you in that, hey, this could be a buy very soon. So that's something you want to see in the chart. Of course, I'm not talking about January, so this isn't helping me out. But that's like a textbook thing that you want to see. That chopping around while these money flows are going higher. That's great. Right now, when they're moving in the same direction, you're not learning too much. Okay, so this is basically telling me nothing because it's supposed to be moving in the same direction, and since then it has since the bottom it has sort of moved, right? So they're moving in stride with each other, but that's always something you want to check. This money flow versus what's happening with the market. Okay, so there's that. Found some support near the 50-day, right? Bid higher. Looking at the volume at price, we see there hasn't been a lot of volume up at these levels up here, but that's because the market is probing higher. It's trying to find a top for Facebook right now. Doesn't know exactly where it is. So this is going to make our analysis interesting because we are in uncharted territory, my friends. Mind the gap, though. Thursday closes, what's the high? 47.75s. Friday, gap up to 149.59. What do they say? Gaps get filled, right? So mind the gap when we're taking a look at this. So maybe this is the level, sort of 147, so we have to think about. And then the other level being all the way down here, the 50-day moving average, of course. So that's a couple things to look at. Let's go ahead and take a look at the options chain and gain some more insight here. Pull up your handy dandy calculator. Leave it right there. Near the money, 5.5. Yes. Stacked? No. Side by side view. $1.53 is where we're at. Oh man, they're gonna make our math hard today. That's okay. So the 152.50s. Bam. Let's go ahead and price this out. 355 by 360. We're going to call that 360. Just because that's where you would get filled at anyway if you try to buy it. 357. Fine. I'll do 357. Let's do 357s. 357. Plus 293 by 296. Let's call that 295. And you got 652. So the market's pricing in $6.50. Essentially, divided by the 152.50, you're talking about a 4.2% move in shares of Facebook is what the market is pricing in. 4.2%. 4.2. Because it's $6.50. $6.50, 4.2. Let's see how that correlates to what we've seen before. Remember my estimate, surprises, consolidated surprise chart, and I can see what's happened over the previous earnings reports. Has it moved a lot? Has it moved a little? Has it moved at all? Nothing. -7, 3, 7, 12, 6. So I would say that they're actually maybe a little bit underestimating what Facebook could do here, right? Maybe a little bit, just a little bit. But remember, this earnings season, while it started off with a bang, I feel like we're starting to freeze a little bit. Got a whole lot going on in Washington. A lot of back and forth, a lot of politics. Politics as usual, my friends. But now we got to see, some of this has been making a negative impact here overall on us. So 152.50s. What did I say? $6? $6.50. So that puts you at 146. And somewhere between here and here, right? So this is sort of the realm that we need to be messing around with. All right, we're gonna do a bunch of these today, right? Because I'm feeling adventurous, I think, sort of. Let's do a couple credit spreads. Credit spreads on the front week, shall we? So we're going to do credit spreads on the front week. Just for giggles. Set it side by side. Let's do the stacked view. Okay. So let's price an out-of-the-money call spread on Facebook. Is this the right day? Yes, it is. Okay. So out-of-the-money call spread. So they're basically pricing between here. So let's say 160s. So selling the 160 call and buying the 162.50. What does it look like? If we sold the 160 call, again, this is the May 5th, 160 call, 81 cents is what you're going to get, simultaneously buying the 162.50 for 43 cents. That's a 38-cent net credit. Now, the amount of money you're going to have at risk is 250 minus that 38 cents, or 212. So you can make 38 on 212. That's 18%. That's not too shabby. When you're talking about a trade that's only going to stick around for a few days, right? You could put this on today. Today is Tuesday. This option expires on Friday. And all you need is shares of Facebook to close at or below 160 at expiration, right? 160 at expiration. So, excuse me. I'm going to say this is a bear credit. Bear credit spread. Short, May 5th, 160, 162.50. Call spread for 38-cent net credit. Boom. Right? Now, again, guys, I'm not going to leave you hanging here. We're going to do a bunch of trades. So, first was that little bear credit spread. And I guess I didn't point this out before. We have a lot of open interest here at the 150s, at the 152.50 and the 155. Then it starts to wane a little bit. You got a little bit of a spike. There is curiously a pretty decent amount out at the 167.50 level, but wouldn't worry about that too much. And overall today, we've basically been concentrated these three strikes. Sort of the 155 to 160 has been where the bulk of the action has been. So selling the 160s, that seems okay to me. All right, now let's look at a bullish trade on Facebook. $6.50 to the downside. That puts us at our 146. What's the other thing too? I want to get back into this chart. Where's this gap? Gaps get filled. High of the gap, 147.75. So we are on the other side of that gap that could potentially get filled. So there's a couple of things going for you here if you're looking this way. Scroll up a little bit. Thank you. All right, remember, these are the puts. So this is the May 5th expiration on the put side. Going 6.5 out of the money. Whoa, I need bigger than this. There we go. 6.5 out of the money puts you at the 146s. And again, I just want to highlight big chunk of open interest there. Big chunk of open interest just on the other side of us. And then you do get some decent amount of interest out here, open interest out here. But then again, remember, this is a stock that's been coming higher for a while here, so you kind of expect to see open. And I bet you if you went further in, see a ton of open interest, just dead bodies littering the highway further up. Okay, so these 146s. Yeah, we could do this. Just a 146, 145. We don't got to get too cute with this. You can make this more complicated. You could push this further down the line if you wanted to. I'm sure it would change it up a little bit. Drop it, drop it, drop it. It's going to drop, but let's do the math here. Give me a calculator. All right, so if you were to short the 146 May 5th put, you're going to get 74 cents. Simultaneously buying the 145 put. This way you cover yourself to the downside. You cover your risk, right? 56 cents. So you're going to get an 18-cent net credit here. The amount of money you're going to have at risk is the difference in the strike prices, which is a $1 holler minus the 18 cents. That's 82 cents. So on this trade, you can make about 22%. And all you need is shares of Facebook to close at or above 146 at expiration. It's on the other side of that gap. That sounds nice, right? So I'm going to do the bull credit spread being short the May 5th 146, 145 put spread for an 18-cent net credit. Okay? That and that. So for you Condor folks, that's kind of where I would set that up. Past the 160s, under the 146s. Maybe even bump it out a little bit more. But you can get some decent return there on the Condor. Let's just go 2 weeks out to the front month. The numbers are going to be similar, but a little bit different. Now we're going to go long a call spread on the bullish side and long a put spread on the bullish side. Or long a put spread on the bearish side. Look at that. Big. Everybody at 150, right? Look at this. Look at this. Who did this? Who did this? And who did this? Explain yourself. 11,000 contracts have gone out at the 165 expiration today. At the 165 strike today. That should be popping up on your radar. Big volume there. Interesting. Why so much volume, huh? Why so much volume? We said 160s. To the upside, we're kind of in between this 160 and this 150, right? Let's say it does every bit of this, right? Let me clean this up so they don't look like I got a bunch of nonsense on this. 152.50s and 160. This is quite bold. Now, you guys know me. And you know, typically I'll like do half, right? So I'll say, hey, if the market's pricing in the 160, let's just say it goes half of that because you can kind of get a nice, decent risk versus reward in that case anyway, right? I do that all the time. You guys have seen it. This one I'm going to say what happens if you go aggro and go very aggressive here on the long call spread. Let's price this out. This is the May 19th expiration. The 152.50 call is going to cost $4.23. Simultaneously shorting the 160 call is going to get you back $1.32. Net outlay on this one is $291. $291. Now the amount of money you can make here, the difference in the strike prices, which is $750 minus the $291. So you can make $459 on $291 or 157% rate of return. Now, what do you need in order to make this happen? Is shares of Facebook would have to close at or above 160 at expiration. Okay? So again, the bullish debit spread here is long the May 19th. 152.50, 160 call spread for a $291 net debit. It was $291, right? Boom, boom, $291, yes. Okay. So that's the bull debit spread. Yes, aggressive, but that's what I'm here for. Here to show you an aggressive, long spread. I want to give you guys all of the sort of options here that I can. Now, how far are we? I thought we're right about 150. Are we in 153s yet, folks? 153 and change. You know, I always kind of go back and forth about, even though this is out of the money just a little bit, this is the great debate I always have. Do you buy the put that's a little bit in the money? Then you get a little bit of intrinsic value here. So this one already has $2 of intrinsic value. So that's the difference between where the stock is trading at now and where the strike price is. So you got $2 of intrinsic value already. So then, you know, when you sell this, you're saying, well, I'm already in the green a little bit, and it's going to be better for me, right? Maybe I'll do that. That's going to be one way to manage this risk. Now, we said 146s. Where's the top end of the gap? We were talking about this gap. Bottom end of the gap. I mean, well, this is the top end. So bottom of this candle is the top end of the gap, and the top of this candle is the bottom end of the gap. Don't say that like 10 times fast. Friday's lows, 149s. 149s. And again, look, 6,000 contracts down at the 145. Interesting. So let's just do, this one. I'm going to just show you the 155, 149. Because the numbers, okay, so because overall, we're more conservative here on this sort of long put spread, right? Much more conservative. But we are paying a little bit for what's already here. And I'm going to put this, when I do the math, let me explain myself, okay? So going long the 155, you're going to get 478. That's how much it's going to cost you. Simultaneously shorting the 149 put, it's going to cost, you're going to get back 214. So 264 would be your net outlay on this, okay? So here's the good news. If Facebook just kind of goes flat and sideways, and it stays right at 153 right now, this 149 would expire worthless, and this 155 would be worth $2, okay? So it's a little less risky than the other outright call spread that outright spread we're looking at before. Now, I could change this and we could do the 152, 149, and then now if Facebook stays sideways, you're going to, you lose it all, right? But then there's less to lose. So let's just price out both of these. So 264 for the 155, 149 call spread. So the amount of money you could potentially make here, the difference in the strike prices is $6. So now 600 minus the 264 is 336 divided by the 264, 127%. So you can still make 127% on this if shares of Facebook close at or below $149 at expiration. So 127. So keep the 127 in your head. Now what I want to do is I'm going to price out this one. The one having the 152.50 as the long side of this. So you go along the 152.50, it's only going to cost you $350 to buy that put. You're still going to get $214 back for the 149. So in this case, you got $136 is the amount of money that you have at risk. Now your upside potential is $350. So now minus that 136, you can make $214 on 136 or 157%. So you can add 30% potential rate of return for this by pushing this leg that you go long a little further that way, right? So that's basically, and then you're odd. Now if this goes just sideways, you're going to lose all of this, right? All this is going to be gone because you're not going to be in the money until you're at 152.50. So I think the way to go if you do want to play the put side is going with the 155, 149. So I'm going to say that the bear debit spread is long the May 19th, 155, 149 put spread for, what do we say, like 264? Is that what it is? Price it out again. 478 minus 214 is 264. Exactly. 264 net debit. Okay? Boom. Got a lot going on there. Now, of course, we got to talk lotto tickets. So here are our aggressive aggro trades. If we want some aggro trades here, my overall feeling first on Facebook is as follows. So we've got a stock that's been running up into earnings. Everything's looking good. It's a little bit overbought here on the technicals. Not a big deal. Coming off a commodity channel index buy here on the 18th of April. Everything's been great, right? Looking good. Last time we had a serious gap down on earnings was what? November. Gap down a little bit. I'm going to play this one. I think the way to play this one is very similarly to the Amazon trade. A lot of these tech stocks have been going up. Everything's been going up on earnings, okay? And look at what happened. I mean, Google, great. Amazon, running out of gas a little bit. Notice, still got the divergence, folks. I'm telling you, I'm going to be right about this. Oh, don't get me started. All right, but back to Facebook. I think that I want to be kind of cautiously. I mean, I'm so on the fence about this. Cautious. I want to sell credit. This is what I want to do. Credit spread on the on both sides. I think the Iron Condor is the way to go here because I don't think these things are going to move all that direction. So I'm kind of net neutral on this. Iron Condor is my preference. Okay, but if I was rolling the dice and I had to buy a lotto ticket, I would say that this gap gets filled, right? So how much are 149s? How much is a 149 put going for? So the 149 put is 153. What's the real lotto ticket? Like, where can it really collapse to? A 145, 146. What could Facebook possibly say that drives the stock down, 10%? Or 5% for that matter, right? 10% takes us to 140s? No, that's not going to happen. 7%. So what's that, $10? Yeah, that's 6%. That's right. So $10, 143s, 145s. Let's say that. I'm going to say the lotto ticket is the 145 put. There we go. That's what I'm saying. For that 56-cent net debit, right? That's what I think the lotto ticket is. I think the lotto ticket's to the downside. I don't think it's to the upside. The risk that this thing breaks up to like 180, right? I don't see that happening at all. I think the risk is to the downside here a little bit. Again, I think the Iron Condor is the way to play it. But if I had to roll the dice and buy a lotto ticket, I'd be buying those 146 puts or 145 puts. 55 cents, 56 cents. Somewhere down there. I think that's kind of where I would go with that. Okay? But in general, guys, I'm looking for the Condor because I can put this sort of visually on this chart what the Condor looks like. 160s and 146. Right? That's our Condor. That looks pretty good. So it's under the gap, the previous gap. And 160 just seems like a psychological point. I don't know where that puts the valuation at that point. The market cap. What's the market cap on Facebook right now? Do we have this readily available? Of course we do. Quote overview here on Zacks. We can see it. Our market cap, $440 billion. So, yeah, it's not any psychological market cap or anything up there either. So, that's where we're at, guys. All right. So, thanks so much for hanging out with me here today on Zach's Live Trader. Boy, that was a long one. 45 minutes. What the heck is going on? Guys, you got to push me along quicker. Holy smokes. That was a big one. Whatever, man. I was in the zone. I felt like talking. I got nothing. I got no one else to talk to. No, I'm just kidding. I just got in the zone, man. It just started flowing, so had fun doing it. So again, guys, thank you so much for hanging out with me here on Zach's Live Trader. Don't forget, tomorrow we've got Tesla. Don't miss Tesla tomorrow. And that's about all I got for you guys. So let me know if what trades you guys put on, what some of your thoughts were. Shoot those over to livetrader@zax.com. If you're not already hooked up with our $9.99 a month premium service, be sure to shoot me that email so we can get you there. And what is this? Kurt, what are you talking about? May 19th IC. Yes. No, Kurt. May 5th IC. May 5th. All right, guys. So, yeah, officially the May 5th Iron Condor, I think, is the way to go with this one because I don't think it's going to move that much. I may be wrong, but shoot me those emails, livetrader@zax.com. Let me know what you think. And I will see all of you folks tomorrow at noon for Tesla. All right. See you then. Thanks a lot.